Good morning, everyone, and welcome to the Place Your Trades Network. I'm Anthony Crudele, and today my co-host is going to be Job from Order Flow Labs. I always love talking with Job. And today we are going to be pumping up the volume, and Job will explain how to use price and volume interactions to trade CME Group's event contracts. Today's podcast is brought to you by Tradeovate, which has built a custom app dedicated to trading event contracts. This is what we're all using at Place Your Trades. If you're watching this on Twitter, welcome. We love streaming on Twitter. There's a link in there. And there's also, if you're watching on YouTube, a link in the description. And all you have to do is click on that link, go and download the Tradeovate web app for free, where you can follow along and make your own picks. And today, Job and I are going to be making picks live on the air. Remember, everybody, the Place Your Trades Network is live Monday through Friday from 9 to 9:30 and Sunday nights with J&J from 6 to 7. So make sure you like and subscribe and hit that reminder so you never miss an episode of the Place Your Trades podcast. We really appreciate that. So let me now bring in my brother Job.
How's
Job,
it
what's going
going?
on?
Good
Good
morning.
morning.
Did you get your coffee today?
Oh man, I'm double espresso every morning, man. I am pumped up. I had a
Nice.
protein bar and double espresso. I could do laps right now out here.
Now we're talking. Yeah, let's pump up the volume.
So you and I, this is the first time you and I are just interacting together on the Place Your Trades Network. Obviously, we've done podcasts and stuff before, but I want to hear your thoughts on event contracts. They've been open now. What we've been doing this is, I think, our 6th or 7th week here at Place Your Trades. We're getting more and more people involved with it, which is awesome. But I want to know, what is your experience so far with event contracts?
The simplicity. There's one particular way I like to harness their accessibility is through something we're gonna look at today, and it's pretty low stress, low blood pressure, and it's a means in order just to get going and getting involved with those and taking the opportunity that you can see fit. Now, a lot of these, what I've been experienced is that I'm taking a range move and taking them off. And so there's times where I'm holding that thing through the close, and there's times where I'm not. Because if I'm meeting my expectations, I'm hitting those targets, and I'm also getting a pretty decent percentage on the movement of those contracts themselves. And so, yeah,
Yeah, that's interesting. I think everybody I talk with has a different way of approaching trading them. It's funny. It's just a simple yes or no, which is really yes is a call, no is really a put. For those of you that are new to event contracts, there's daily options essentially, and you can hold them to the close, and that's where you get that fullest reward, right? But you can also get out of them at any point in time for a win or for a loss. So
yep,
I'm seeing a lot of people do a strategy maybe similar to what you're doing, and we're going to talk obviously more about that today. But you can buy something that's out of the money, and maybe those of you that don't know what that means in the options, that means it's something that's not currently at the market price. So you're buying something that's a little bit cheaper of a daily option, and if it doubles, which is some of them could be priced anywhere from a quarter. I bought some at a quarter before. I bought some at a buck, and actually Julia Cordova was on here. She talked about a natural gas trade that got us all in at a buck, that she really liked, and that ended up being a good winner. But and then if they go to $2, $3, $4, you're making 100, 200, 300, 400%, which in an intraday trade, if you're doing a regular option, it would almost be impossible to happen, right?
yeah,
On a move like that. I think that's one of the most interesting things about them.
yeah, absolutely. Also, I kind of touched on a little bit of, we all have different styles, and it's great seeing yourself and the other people who are on the show here different times, and their different styles come into play. And I just can't help but think oftentimes, like, man, like, mine's out there, but I'm gonna try to do my best to explain it in a way that is not um, not scary, because it's very visual, very straightforward, in the same way you can use other tools.
All right, cool. Let's go into it. Let's take a look at the charts. Let's pull up what you've got for us here today,
All right.
um, and tell us what we're seeing.
So we're looking at a 4-hour chart from NQ, and what we're doing is that volume profile is not that entire chart. It's simply from that most recent low that came in before Friday, and so encompassing what the activity that occurred into that into that move on Friday is important here. Why? Because if you look at just before, you have the two candles that are back to back. We went straight down, we came straight back up. Now that in itself, uh, one second here.
I love the dogs inside the shows. That's the best. Don't worry, he's fine. We could barely hear him. I
Um,
wish I had my dogs with me right now.
so basically, what we've got going on here is that volume activity from Friday built up above that red arrow, okay, and created a P-shaped profile. And what a lot of people know about P-shaped profile, and it looks like the letter P, is that the bottom there's a tiny little low volume area that's going to help determine movement forward. So if it comes down and holds it, it can hold it for continuation to the upside, and vice versa. If it gets below it, then it's kind of a decision point. And so for me, it's a very visual way to look at this type of activity. And on NQ, if you look at within the volume profile itself, you have a value area where 70% of the volume occurs. Well, we came down to the low part of that value area low yesterday. We
Yeah.
held it, and we held that, and then took off. And so, with all leaving all that aside, there's areas where there's more volume, there's areas where there's less volume. How deep is that valley? That's what we want to play with event contracts. Something like this here. Being that we're above that high volume area, um, and holding where we just discussed, any push back down into this, I want to be grabbing strikes at nearest of that high volume area. That as long as we remain above that red arrow. So preferably we push down into like the 450 zone. Okay, 11,450 or 11,400 come out to the edge of that node, and we're able to grab the 11,500 contracts for close above. Why? Because the way that's built out there, it's likely to have rotation around it until one side gives. And you can harness this on a higher time frame type of profile, and utilize those bigger dips in the volume, those deeper low volume areas, because they're going to play a little bit more than the low volume areas you're going to see on a 30-second chart.
Got it. Actually, I want to pull in now that we got that visual, let's pull up the NASDAQ actually. I got the chart above you and I now. And so everybody, this is what it looks like on the event contracts on the Trade app. If you've not seen it, like I said, you can click on that link down below. You can go download it. It's so easy. If you go to placeyourtrades.com, you put your email in, you see here, and then it'll redirect you immediately, and it'll take you to go and get the app. And you just click on the blue button right here, and you go in, you sign up. And then eventually you get to this point. And so let's pull up the NASDAQ. So the NASDAQ's 11,500. That's that big strike. So basically, when you said it comes back down to
Yeah, I
11,500,
want to.
11,450, this is the strike you're looking at.
Yep. So I want to look to grab that strike, but I want to grab it when it comes down into the low volume area of let me see here exactly. I want to be looking to grab that 11,500 when we get into 11,553,
Well,
11,550
you're not
range.
far from here. So that's only 40 points in NASDAQ. So there's a couple things, ways you can play this, everybody, is one is when it gets down there, you could just go and click the yes, and you can go in and, you can see right now it's trading $15.50. Or you can kind of project where it would be. And so what I'm thinking is, first I want to show you, if you click that, you can go to a quick order, which is a limit order, or I mean a market order or a limit order. So what I'm going to do is I'm going to put in 10 here to buy. And I think when we get down there, you're probably going to see the NASDAQ or these trading around 12 bucks. So I'll even put 12 and a quarter, 12.25 Christmas. It is getting near the holiday season. This could be lucky today, Joe. I don't know, man. I'm going to buy 10 there if it gets there, then I place my order. Because basically, according to what Job is saying, he's thinking that if it gets down to maybe right around 11,553, that could be an area that holds. So these event contracts, obviously, the yes is going to be worth less as it gets there. Right, Job?
Yep,
Uh,
that's exactly right.
and so then this is the area. So in one of these things that's interesting, and I'll let you talk more about this, is that when you get in these, you're talking about you could trade out of them or you could keep these. What's your plan for today if it gets down there? Do you start scaling into these? That's something I've done. What's the plan?
Yeah, I would probably scale into these here too. And this would be something I want to hold till close. Tomorrow is the FOMC. I want to at least hold till yeah, into the close tomorrow with FOMC and different data reports. It's likely to have a little bit of a pump. We're first day of the month, right? You like
Yeah,
this, Dave,
I
right?
love it. The
You
first
love
day of the
this
month,
day.
yeah,
It's
bullish.
so and so coming down into that 1153, 553 zone, I'd be grabbing them, and I'd be honestly grabbing them into even like into 500.
Got it. So it's interesting. So that's the plan today is that anything sort of dips down in here because up here, let's face it, if you buy them at yes is $15.50. I remember everything only pays $20. So you already know the range for the daily option, right? So the yes is a call, no is a put. So it'll expire. If it closes even one tick above 11,500, it'll still be a winner. So one thing that is interesting is that if you were to buy them in here, and it were to just as long as it were to stay at least one tick about 11,500, you could be a winner. And that's one thing we should talk about, Job, is that this is one thing I like about them is that if you want to be bullish on a day going into a Fed week, this is a great way to approach it because
Oh
like,
yeah,
you
yeah,
don't have to guess the close. You just have to guess that it's going to get a stay above a level. So when you have your homework like all you wanted to do is stay above 11,500. So where you get into yes doesn't matter as long as it stays above 11.5.
exactly, exactly. You're just trying to get the best price for it, and so that's why I was kind of trying to show there. You get those thinner zones on that profile, then you're likely to get a little bit of a response from those. So if you look at even the ES, we could
All right,
take a
let's
look
go to
at the
the ES.
ES one.
All right, let's go to the
Okay,
ES. All right.
so the equivalent of that 11.5 53 area is about 3904 on ES. Okay, and so you look at this, the chart, it looks very similar. The shape of that profile looks very similar, and we have
Yeah.
that little low volume area at 39, right above 3900, and so that's where I'd be looking to tack in on any position with ES, but my position would be with NQ, and then where that red arrow is, that's where things would shift for me, and so if if it were to push down underneath that, then that'd be troublesome. But with the event contracts, you don't you don't have the same risk with this, and so that's why in leaning against a longer profile, a higher time frame profile, with these zones, snagging them there, you're going to get a response very
Yeah.
likely.
Let's take a look at that in the S&P now. And everybody, I want to hear from you in chat. Are you guys bullish on this first day of the month of November or bearish? And actually before we do that, that's something I can do, which is pretty cool because when we went to Twitter earlier this morning, and this since we're talking about S&P, we can go and look at this. We put a poll out. If you go to place your trades on Twitter, there's a poll here. Will the E-mini S&P close above 39.25? And Job, 79% of the people are bullish. Makes me worried, even though I'm long. I am long some of the yeses right now, but I am bullish too. But look at 80% of the people are
Let's
bullish.
go.
I know. So
Let's go.
everybody's been so bearish. Now we're all bullish together, and it's
Hey,
interesting
that's
how
fine.
how that works, right?
That's
But
okay.
the charts are showing that. But let's go. So let's go to the S&P. Let's take a look here. So all right. So now we have one thing I should show you, everybody, is the strike list. So this is something that's pretty cool. And if you want to see all the different strikes for the day, typically they're quoting five of them. So the one that's closest to at the money, and then you have two above and two below, and the other ones are really kind of untradeable because they're so far away. But they may come into play, as time goes by throughout the day, as we've seen with volatility lately. So right now we're talking 39.25s. So let's go there. And what was that volume node that you were talking about where we were looking at? Maybe I'll just flip back here real quick, just
Here, let
so
me
folks
grab it off
can see.
of the chart itself here.
Yeah.
Um,
So let's go back here.
so
So
that low
now,
volume node is 3904.
so 3904. So really, you've got a couple strikes potentially in play today. So for you, you think the 3900, we almost play this like the NASDAQ?
Yeah. Oh yeah.
So get down to 3904 and then you look to buy the yeses. So, once again, I'm a believer in Job. And so I'm going to work some orders here. And these, I don't know, because I'm already long some 39.25s, I'm going to actually go in at $11 here. And I'm going to buy 10 there too. And I should show you guys, it shows you your potential profit and your win rate. So times 1.8. So it shows you, how much you have potential for making. So I'm going to work at 11. So let's go back. And I like that philosophy because if we think we're going to be somewhat rangy on a busy week, but we also want to be bullish, we let them pull back a little bit, maybe to some of this technical levels that you're looking at, which are really simple. Everyone can see volume profile on their chart. And then you look enter in and long. So that's how we look how to play these two markets. One thing I want to talk about as well, Job, and I want to see what your thoughts on it is. I know you guys at Order Flow Labs, you guys focus a ton on, obviously order flow and how you guys will look at, obviously for day trading.
Yep.
Have you thought or put any sort of interest in using these as hedges? I know a lot of people have been talking about that. I'm just curious what your thoughts have been.
Yeah, there has been some thought into that because you, and where my mind goes with that is hedging more of a runner. So in a core position, I wouldn't be hedging a full position, but in leaving something on, if I'm going to leave a contract going and moving for the day, or even swinging a contract, then you can take whatever the quantity is and offset some of that by utilizing the event contracts. And that's a similar approach that you can use with other options, but in the sense that the ease and lack of the other complexity is very desirable here with that.
Yeah, because I mean, I go back to, especially on days like today, if you think we're going to be boxed in, if you have some micros on, you could use these event contracts kind of as, in some ways, as
A
like I
buffer.
said, as a hedge. Yeah, right. And I haven't done that yet at all. So I trade more intraday swing. So once I'm kind of in, it's not a play something I would actually probably do. But who knows? I mean, we evolve, right? And I was just curious to hear what you thought about that. And that is pretty interesting. So, quick summary today, Job. We're
Um,
bullish for stay a
my
month.
like Aaron was asking here, my dog's pretty bullish.
The dog is
Dog's
bullish.
bullish. We're bullish. Let's
The
go.
dog, and yesterday Brian Shannon was talking about my hair on the peak. I don't know. I feel like it's getting a little flatter today, so I'm
Oh,
bullish, but
looks
not
good, man.
as bullish. I don't have the slope I had yesterday.
Yeah.
So who knows what kind of a rally we get? But yeah, we talked about our plays in here today. Everybody, remember, get that Trade Evade app. You can go and check it out. The link is in the description. If you're watching on Twitter, the link is there. And I see a bunch of you guys in here. We need more likes on YouTube. We really appreciate that. It helps keep the
Somebody
show
saw it.
going. What's that, Joe?
Somebody saw it.
Somebody saw what?
The bear on my shirt.
The bear.
On my shirt.
That could be a good omen.
Okay. Well, here's the deal. I think we're getting close to that activity. And since it was pointed out, I think that the bear starts to grow on NQ around 760 to 790.
So if we would have a big rally today, you're going to make me pull this back in here again. So so he
Good
thinks the
catch.
bear.
Good
So let's
catch.
do this before we close out. 760, 790. That's that next strike. So what would be interesting is if we got up there today on a big move up,
Take the no.
be near a late day rally, 760 to 790. That no could be somewhere around
You could
6 to 10 bucks.
grab that for pennies. I don't know.
Right. Well, awesome, man. Yeah, thank you for giving us the two sides of that. And because of that, you guys better like this YouTube channel. And like I said, never miss an episode. Click the subscribe button. And also, we have those notifications there on YouTube for a reason. We're on Monday through Friday from 9 to 9:30. Job and the Order Flow Labs are going to be with us here every week. We always love having everybody here. Job, thanks for the great summary on the first day of the month. I got my order
Thanks for
working.
having me on.
It's always great to speak with you. Have a great trading day, everybody. Stay patient. Wait for the levels that you put your homework and time in to get there, and then you execute. Have a great day.